earnings, and staying in the banking theme here, India's second largest private sector lender, so we're talking ICICI, is actually set to report its results fourth quarter later on today. Now, the bank has been battling charges of nepotism against its CEO, with the stock losing more than 10% so far.
All right, let's get more on this story. We'll bring Bloomberg intelligence analyst Diksha Gera joining us. Diksha, with all the controversy surrounding the CEO, what are you watching for?
Hi, Heidi. Thanks for having me over. So I think everyone's kind of focused on the controversy with management and the issues there, but I'd like to kind of draw back the attention towards the numbers. What I am looking for after the earnings today is a massive consensus earnings revision. So if you look at the numbers, consensus is expecting about a 43% jump, and this is like an estimate which is an average of 43 analysts on the street. They expect a 43% jump in earnings in the coming fiscal 2019, which I don't think is going to happen. So that is one area that I'm closely watching. Obviously, asset quality has been like a big drag, and everyone's kind of talking about it. But what I'll also monitor is the new business momentum on how ICICI is doing in some of those areas.
Diksha, so, I mean, perhaps losses this quarter, another year of falling profits here. A lot of this comes down to what's been hounding the banking industry there, is that a lot of these bad loans seem to be creeping up. Do we expect or anticipate another round of this bad loan recovery phase?
Yeah, so actually, if you see, there has been a fair bit of transition from the recognized stressed pool of assets back into something which is the categorized as non-performing loans, right? What is going to, that's just optics, basically. So what we really need to monitor is how do the total stressed loans ratios behave, which includes the non-performing as well as the restructured loans portfolio. So are there any new stresses that are emerging in the book of these banks? That's the key area to watch out for. But yeah, just in terms of, provisions, we will see increased provisions as some of this resolution happens and how much haircuts the banks take on some of these portfolios.
I mean, is it all doom and gloom then? Are you seeing kind of a recovery when it comes to things like loans growth? Where do you see the positives?
Yeah, so I think, which is why I mentioned I want to see how the new business momentum is kind of playing up here. So if you see what's happening in India is a lot of the state-owned lenders which have been under the prompt corrective action measure of RBI, they're quite constrained on their capital. So basically, they cannot be going out and lending to large corporates, and the demand there is kind of improving, starting to improve or showing some green shoots there. So that actually opens up a huge opportunity for the Indian private sector banks to scale up and kind of gain some of market share there. What remains to be seen is if ICICI is actually in a position to kind of get its act together and gain some of that market share there. Secondly, I think just in terms of their exposure to retail or consumer business, they've actually grown their book to about 50% over focused on consumer. Now, will some of that benefit start showing up in its returns profile, in its margins? So that area is what I'm monitoring. And thirdly, they've been talking about growing their SME book. I want to know how well they can do that. So those are the three areas that I'd watch out for.
All right, and of course, shares get underway in just over an hour from now over in Mumbai. Diksha, thank you so much. Diksha Gera there of Bloomberg Intelligence. In fact, we'll be talking more about India next, but pivot here to this news of an investigation into the stock plunge for the nation's big